Natural gas daily forecast, January 13th, fxempire.com. The natural gas markets fell again on Thursday as a downtrend in this market simply will not relent. Inventory numbers that came out on Thursday did absolutely nothing to instill confidence, and half of the winter season in the northeastern United States has come and gone without producing anything along the lines of serious snow and certainly serious cold. Because of this, the demand picture looks extremely bleak at this point in the season. By now, most of the area in the Northeast would have had several winter storms. Normally, it's healthy this time of year because of those winter storms and the cold. From such cities as Boston and New York, and Philadelphia in the northeastern corridor, all the way west to places like Cleveland, Columbus, and Pittsburgh. Normally, the cold that sweeps through that region attracts big demand because most homes in those areas are heated by natural gas. However, with the recent discoveries of the massive natural gas deposits available through fracking, the shale process in Pennsylvania and Ohio, as well as many other fields in the United States, natural gas is in abundance in the United States. In fact, the U.S. is quietly becoming an energy exporter for the first time in decades. As for the market, it's very hard to argue with the trend. Any buyer of this market has been pummeled by the onslaught of selling over the last 12 months. 14 trillion plus cubic feet of natural gas that has been found in the United States certainly has this market struggling for the foreseeable future. One has to realize that Canada has almost as much as the United States, and you can see how prices will be depressed for the foreseeable future. Technically speaking, the market is certainly far oversold at this level. However, this isn't the time to step in and become a hero and try to buy the bounce. The pair is simply far too weak to even consider that. Instead, we are looking at the $3 mark as massive resistance going forward, and we would love to see a retest of that area. Quite often, you will see a breakdown, a bounce, retest, and a failure. That would be classic technical analysis, and we would be shorting that hand over fist. If for somehow it gets above that, we've got 325 to contend with, 350, and of course $4. If we somehow get above $4, then the trend's probably broken to the upside. But it's really hard to see that in the foreseeable future. The candle for Thursday is a little bit of a hammer, so it does look like a bounce is coming, but we just look at this as an opportunity to sell from higher prices as opposed to try to do anything crazy like buy this market, which as you can see just has not been working.